Why marketing agency owners feel confused about their numbers. A lot of marketing agency owners tell me the same thing. They're generating revenue, the business is growing, but when they look at their financials, they still feel confused about their numbers. They're not sure what their real profit is. They're not sure how much they can pay themselves. And sometimes they're surprised when tax season comes around and they owe a bunch of money. In this video, I'm going to explain why so many agency owners feel confused about their numbers and how to start getting real clarity. Hi, I'm Craig Cody. I'm a CPA, and I help agency owners understand tax strategies, accounting methods, and business financials so they can keep more of what they make. Today, we're talking about why many marketing agency owners struggle to understand their numbers even when the business seems to be doing well. One of the biggest reasons agency owners feel confused about their numbers is because their financial reports aren't set up properly. Many agencies are using bookkeeping systems that don't reflect how their business actually operates. For example, expenses may not be categorized correctly or revenue may not be recorded in the right period. When that happens, your financial reports stop becoming a useful management tool. Instead of helping you understand the business, they just create more confusion. Another common issue that I see agencies use is they're keeping their books on a cash method of accounting instead of accrual. That means income is recorded when cash is received and expenses when they're paid. But marketing agencies often work on campaigns, retainers, projects that stretch across multiple months. So the timing of cash coming in and expenses going out can distort the financial picture. One month may look extremely profitable, and the next month may look terrible, even though the underlying business hasn't really changed. That's why many agency owners benefit from keeping their books on the accrual method. This matches revenue and expenses to when the work actually happens. Another reason agency owners feel confused about their numbers is that they're not tracking the key metrics that matter. For example, gross profit margins, client profitability, labor as a percentage of revenue, operating margin. Without understanding these metrics, it becomes difficult to evaluate how the agency is really performing. Revenue alone doesn't tell the whole story. Many agency owners also look at their financials too infrequently. Sometimes they only review their numbers once a quarter or even just once a year when their taxes are going to be prepared. But your financials should be a regular management tool. When reviewed monthly, they can help you identify trends, spot problems early, and make better business decisions. And finally, a lot of agency owners feel confused about their numbers because no one has actually taken the time to explain them. Your CPA or advisor should help you understand what your financial reports actually mean, what numbers you should be watching, and how those numbers impact your decisions as a business owner. When that conversation doesn't happen, the financials become something people avoid instead of something they use. When your accounting system is set up properly and you understand your financial metrics, everything becomes clearer. You can start to answer questions like, how profitable are we with our clients? When can we hire our next person? How much can I afford to pay myself? Are we actually growing profitably? That clarity is what allows agency owners to make better strategic decisions. If you run a marketing agency and want better financial clarity and smarter tax strategies, make sure to subscribe to the channel. We regularly share insights on tax planning, accounting strategies, and financial management for agency owners. And if you've ever felt confused when looking at your financials, let me know in the comments below.